I have 10 a.m. Glenna, can you take us live, please?
We're live now.
Thank you and welcome everyone to the August 24th, 2003 KPPA Audit Committee. And I'll start with an opening legal statement. Mr. Gord.
Yes, thank you. For the record, I want to note that this is a regular meeting of the Kentucky Public Pensions Authority Audit Committee. This meeting is being broadcast via teleconference pursuant to the Kentucky Revised Statute Section 61.826 and may be viewed by the public at the Kentucky Public Pensions Authority offices located at 1260 Louisville Road in Frankfort, Kentucky. It is also being broadcast to the public via Facebook. I ask if you are speaking and are not appearing by video, please identify yourself before talking. In the event the video or audio broadcast is interrupted, we will attempt to reestablish a connection. If a connection cannot be reestablished within 30 minutes, the meeting will be adjourned and rescheduled to another date. Thank you.
Thank you. Next is roll call. Ms. Park, can you do that for us, please?
Yes, sir. Mr. O'Mara.
Here.
Ms. Hampton.
Here.
Ms. Pendergrass.
Here.
And Mr. Summers.
Here.
Thank you.
Thank you. Do we have any public comment?
No public comment today.
Thank you. Next on the agenda is the approval of the July 26, 2023 minutes. They've been included in our board book. Do I have a motion to approve?
So moved.
Thank you. And second?
Second.
Thank you. Motion to approve first and second. Is there any discussion? Hearing none, all in favor, please say aye.
Aye. Aye.
I need one more for it to pass.
Aye.
You got mine?
Thank you. Okay. Now I'd like to invite Adam Gordon from the Auditor of Public Accounts Office, who is doing our audit this year, and he has an audit update. Mr. Gordon.
Thank you, Bill. So I also have Linda Hinton with me today. She is the audit manager, and I'm the auditor in charge. We'll give you the audit update. If we could please go to the next slide. All right. So the purpose of our audit, the APA, or the Auditor of Public Accounts, is required to audit KPPA at least once every 5 years. So that is in statute, as it states there. The last time Linda and I were in there was in for the June 2018 audit. We follow the generally accepted government auditing standards, which is, we call it Yellow Book, and that is issued by the Government Accountability Office, or GAO. And then the engagement letter that we sent to Mr. Eager was signed April 11th, 2023 to initiate the audit. And it also says that we're going to audit the annual comprehensive financial report, or the ACT, for June 30th, 2023. So next slide, please. Yeah. So as I stated before, Linda Hinton is going to be the audit manager. I'm the auditor in charge. And then we have another audit manager. She focuses on the IT audit, so of the computer systems. And then within our staff, we have 2 financial auditors, and then we have 2 other IT auditors. So, okay, next slide, please. All right, so we started our planning once the engagement letter was signed. So with every audit, we like to start planning, assessing the risk, what's our materiality going to be, understanding the entity. So we started that as soon as we could. And then the IT auditors began in May. I believe they're almost wrapping up now with that. And then in late June, our other staff auditors, mainly the financial section auditors started in June. And we're currently working on the gaining of an understanding of each of the sections, processes and controls. And those sections that we are working on are contributions, or revenues, benefits, expenditures, investments, the related income for that. And then we're required to perform census data testing since this is a defined benefit plan. So, next slide, please. All right, so kind of what we have upcoming. So next month, we're going to be meeting with some employers and we're going to be performing the census data testing. So that kind of involves just looking at individual members' data because we want to make sure the actuary receives accurate census data to determine that liability. And then later, we're waiting on the actuary report. There's multiple reports that the actuary issues, so we will be reviewing those. We expect to get those drafts in late September. And then the actual financial statements testing, like actually looking at the notes and the other sections, that is kind of expected in October once we get it from the accounting staff. So, all right, next slide, please. All right, so here's a timeline. Please note this is tentative, so we try to be flexible. I already know some dates are going to change, but on the 13th, we received the 23 actuary files, so that includes all the member data, all the retiree data. So we're going through and selecting our samples and testing those. We did also receive a draft of the statements in terms of like the tables. So like all the financial statement line items, no notes yet. I know the accounting staff is currently working on those, but that does help us kind of see what's going to be kind of expected to be on those tables. And it helps us perform some analytics and stuff like that. In late September, we expect to get those draft 67 and 74 actuary reports from the actuary and KPPA. And then early November, the full ACFR. So again, the financial statement section, the investment section, the statistical section, and any other sections, we expect to get that full draft by November 1st. And then the 17th of that month, we hope to have all findings, if we have any, returned to us by that date. So our anticipated end of field work is going to be November 20th. So at that point, we should have all of our testing completed and then all our management and legal representation letters back and signed by that date. So, and again, if we need to adjust any of these dates, we'll work with the accounting staff to do that. So, and then November 27th is when we should present that audit report to this committee, hopefully for at least committee approval, and then hopefully sent later in December to the final board, the KPPA Board of Trustees. And I believe that date is now December 6th instead of 7th. So, all right, next slide. And then just the last slide that we have. We've currently met with almost every division, accounting, investments, benefits, IT, employer reporting divisions, all have been very helpful with us. They've been willing to assist us with every question we have. I mean, just recently, we met with some staff and they wanted to bring something to our attention just to make sure we understood what was going on. And I greatly appreciate KPPA willingness to do that. And again, just the cooperation, it definitely helps make our audit more effective and more efficient with the cooperation. So do you all have any questions for Linda and I?
I just have a comment, Bill.
Go right
And,
ahead.
Okay. I want to thank you all for your audit. I'm very pleased that that you have experience doing this. That's very helpful in what we hope to get out of this. I also am very pleased that you had Mike Lamb on the KPPA side this time to help you all and guide you into areas. So that was all just kind of niceties.
Thank you, Ms. Hepton. Any other questions or comments? Well, we thank you and your staff for this work. I know it's important, and we welcome the report in November. So thank you very much.
If I may, I believe Linda and I were just going to leave the call if that's okay.
Oh,
But
absolutely.
But if you all have any questions, just, I guess, reach out to Mike Lamb to get our emails and stuff like that. So feel free to contact us with anything. So thank you all.
Thank you. Thanks again. Now we go to the draft of the fiscal year ended June 30, 2023 reports. And I would turn that over to Mike Lamb.
Yeah, these are really preliminary drafts, but as you know, they're under audit. I think there might have been one or two changes to these since we've presented them for board books, but nothing significant. So I'll start at near the bottom of this page. This is the combining statement, and this is comparing fiscal year end 23 to 22. And you'll see the fiscal year 23 fiduciary net position is $16.9 billion, and that's up 10.85% from the prior year amount of $15.2 billion. That's a $1.6 billion increase year over year. The C plan's net position is up 1 billion or 9.27% of that. And the K plans are up 654 million or 14.69%. This $1.6 million overall increase is driven by the 11.06% increase in total investments. And that's $1.5 billion, specifically in the public equities investment asset class, which is up 22.24% or $1.4 billion from the prior year. That's elaborated on a little bit more in note 5. The C plan's public equities investment asset class is up 1 billion or 20.89%, and the K plans is up 373 million or 27.07% compared to the prior year. We'll take that $1.6 million increase on to the next statement. If you want to page down there, and near the bottom, you'll see that is reflected in the changes. And this $1.6 billion compared to the $675 million decrease in the prior year is a $2.3 million positive difference. And again, most of which is attributable to the net appreciation in the fair market value of investments, which is elaborated on a little bit more in note 6. That's a $1.1 billion positive difference, or $1.1 billion positive in fiscal year 23, and it was negative $1.2 billion in 22. For the C plans, that net appreciation was 199.4% or $1.7 billion higher than the prior year. And the K plans are up 169% or $531 million. That's what I have on the pension financials. If there's questions, I would field them now. If not, I'll move to the insurance ones. Okay, so the insurance near the bottom of that page 15, I think is what we're on. Double check the page numbers here. You'll see that the net position is $7.2 billion. That's up 9.55% from the prior year amount of 6.6. That's a $630 million increase. This overall increase is also driven by the public equities investment asset class, which is up 20.31% or $583 million. That's elaborated in note 5 a little more. This $630 million increase to the net position is also reflected on the next statement near the bottom. And that compared to the negative $377 million in the prior year is a $1 billion positive swing. And most of that is attributable to the net appreciation and fair market value of investments, also in note 7, which is positive 507 million, whereas in the prior year it was negative 482 million. That's what I have on the insurance financials. Any questions on those 4 reports before I dig a little bit deeper into the contributions? Okay. This is the C contribution report. The light orange, yellow highlighted line shows that for both plans, there's positive net contributions, 68.4 million and 75.8 million. Both plans had an increase in inflows from all areas, most notably employer pay credit and employer contributions, which when you combine those two line items, it was 686.6 million for the C non-hazardous versus 649 million from the prior year. That's an increase of 37.6 million. For C hazardous, it's 288.1 million versus 238. That's an increase of 49.3 million. The increase for C non-haz is being driven by higher employee salaries, which are up 106 million. And the increase for the C haz is also due to higher salaries, but more importantly, higher contribution rates, 42.8% in fiscal year 23 versus 35.6%. There was a significant increase in unrealized gains for both the non-haz and the haz plan, allowing for overall positive change in that position for the current period of $705 million and $295 million for the hazardous plan. The bottom chart, if we remove all the investment activity, the non-haz plan would not cover outflows of benefits and refunds and admin expenses by $109.6 million. However, the haz plan would have a positive cash flow of $13.1 million. That's what I have on contributions for the C plans. The next page is the K plans contribution report. And similar to the C plans, the light highlight shows that all K plans reported positive net contributions. $395.6 million for the K non-hazardous, 26.7 million for K hazardous, and 14.4 million for the state police. The K hazardous total inflows were up $186 million, which is driven by the $240 million of general fund appropriation that was received in 2023. The K hazardous plans inflows were up 16.10 million, and the state police inflows were down due to not receiving any general fund appropriation in fiscal year 23. In 22, they did receive $215 million. The benefit payments and admin expenses remained flat on a period-to-period comparison. And there was also a significant increase in unrealized gains for all three plans, resulting in overall positive change in that position for the current period. Bottom chart indicates that without the investment activity, contributions still cover the outflows of benefits, refunds, and admin expenses, except for the state police plan, which shows a $1 million negative cash flow for the period. For the K non-hazardous, even if we remove the $240 of general fund appropriation, the cash flow would still be positive $70 million for the year. That's what I have on the K contribution reports.
Okay, I have one question, Bill. Put that down. If I'm not mistaken, the reason that there wasn't additional money added to the state police is that they are more than 100% funded. Is that correct?
I don't think they're 100% funded. After the $215 million appropriation, it brought their contribution, the AALC amount, down below 100%. Maybe not the AALC, but their contribution rate went, it used to be above 100% and now it's below.
Yeah.
And that appropriation was to do that, was to bring that
Yeah.
contribution rate below 100. So they're not 100% funded, but their contribution rate is no longer above 100%.
The funding is about 52%, I think, off the top of my head.
Okay. Thanks.
I see Betty's hand up.
Do we know why the employer contributions and the actuarial accrued liability contributions are declining?
This K plan or the C plans?
The K plans.
Yeah, I think I have some further notes on that. All right, so the employer contributions are down $20 million. And so there was an anomaly in the prior year. So the decrease has to do with the June 21 payroll. which is in fiscal year 21, and that was at an employer rate of 73.28%. And due to the way the CRIS system handled that payroll, it was the last payroll in June that was paid by the employers in July. So it went into fiscal year 22. And so that 22 amount's a little bit inflated because of that large employer rate of 73.28% that doesn't exist because they've now been split for 22 and 23, but you had that one payroll that was a little bit high in 21.
Does this also take care of I think in 2023, we had an extra payroll so that we could get the pay system for the state on an accrual basis rather than a cash basis? Is that factored into these contribution splits too?
I believe that CRIS system payroll still operates 2 weeks behind. However, because the rates are so different, there was that combined rate in 21 of 73.28. And now that it's split, the rates aren't significantly different. So the fact that that's not being accrued, it doesn't have an impact. But on the accounting side, I think we are posting them correctly. It was just that rate in 21 was high.
Okay.
Does that help, Ms. Pendergrass?
What year did they have the extra payroll?
It was the last payroll of June 21. So it got recorded in July 21, which is fiscal year 22. And that's why it's a little bit higher on those employer contributions versus 23.
Yeah. Is that what you were talking about, Betty? Because I was thinking the same thing. When did that
Well,
happen?
it's a combination. He raised an issue that is a little bit different because it was a shift in the contribution rate from one year to the next on that last payroll that is for June but gets paid in July. So it gets hit with a different contribution rate. But then we also have the shift in how the June and there's supposed to be a payroll on June 30th. And for a decade or two now, they've been making that June 30th payroll in July so that the state budget was better. But I think that for 2023, the June 30th payroll actually is processed in June. So that gives us an extra payroll in 2023. Am I right on those years, Rebecca? Was it 2023 that gets the extra one?
I think Mike said it was 22. Is that, I haven't looked at that in a bit.
I think it's 22, and I think that's might also. I think 23 is now accurate with the timing of the 6/30 payroll being recorded. But I can double check
with
that. And get
24
back.
payrolls instead of 25.
Well,
Right.
and
Okay.
the extra payroll really comes in for the administrative budget. So
Right.
we still get it in time to be in the right fiscal year on our financial statements, except for our administrative piece that it comes out later in the administrative budget. But the agencies are still coming in, and it was still appropriate on the financial statements.
Okay, so I was concerned that there might be another type of trend in these decreasing contributions, but it looks like it's just a shift in timing on the contribution rate. Thanks, Mike. I appreciate the information.
Yeah, I think next year the only change to that should either be change to the contribution rate and or change to salaries for the employers, I hope. No accounting anomalies. Okay. We have insurance contribution reports. Let me find my right page. For the C plans, CNON has a positive net contribution of 66.5 million, which is that highlighted line. That was despite lower employer contributions. The C has reported a negative net contribution of 10.5 million for the year, and that's due to lower employer contributions. Both insurance plans have much higher net investment income as well as unrealized gains. The lower employer contributions year over year is due to a decrease in the rates for both plans. For fiscal year 23, the C non-haz rate was 3.39% versus 4.17%. And for 22, and the C has, the rates were 6.78% versus 8.73. That bottom chart indicates that without investment activity, the net cash flow would only be positive $500,000 for the C non-hazardous plan and a negative $42.6 million for the C hazardous plan. The K insurance contribution, on the next page, the net contributions for K non-hazardous are positive 68.1 million. However, for K hazardous, the net contributions are negative 8.1 million, and state police net contributions are positive 700,000. The bottom chart shows that without that investment activity, the net contributions would be positive for K non-haz, negative for K haz, and state police. Any questions on contribution reports? Here is our admin budget for the year. And I'm going to start with this staff subtotal, which is, about a third down the page. We were 9.25% under budget, and that was $3.4 million. We spent 3.16% or $1 million more than we did in the prior year in this subcategory. I want to point out the employer paid retirement was under budget, $2.3 million. That was a little bit over budget. We had a higher rate in there than what the OSBD memo indicated we should have, and that accounts for most of that over budgeting in the retirement account. Salaries and wages were under by $568,000. One individual line item in this subsection was over budget by $98,000, and that was employer paid sick leave. We've talked about that pretty much every quarter this past year. If we want to jump down to the legal and auditing services subcategory, overall, we were 5.34% under budget, which was $63,000, and we spent 9.77% less than the prior year. The auditing line item was under budget by $90,000. The two board legal representations representatives were under budget by $149,000 in total. However, we did spend $108,000 more with various legal firms tied to pending litigation. And we also spent $97,000 more on legal hearing officers. Those last two items we've talked about quite a bit over the past year. So I will move on to the consulting services. For that one, it's mostly the MMRO contract, and we were $420,000 under budget and spent 13.35% less than we did in the prior year. For contractual services, overall, we were 5.94% or $41,000 under budget and spent 8.31% or $50,000 more than we did in the prior year. The facility service security charges were $46,000 under budget or 57.77%. Actuarial services were $23,000 over budget or 4.73%. And the miscellaneous contract line item totaling $97,000. That includes $50,000 for CM benchmarking and $22,000 for the ProValiant study, one partial payment. But that accounts for that contractual sub line overall. So total personnel was 9.17% or $3.9 million under budget. And it was 1.96% or $695,000 higher than what we spent in the prior year. I'm going to move to the operational category. And so at the bottom of that next page, we'll talk about the total operational first. So if you want to page down a little bit more, Katie. Thank you. So the operational subtotal was 20.21% or $1.2 million under budget. We spent 3.82% or $192,000 less than the prior year. And only one line item in any of those operational categories was significantly over budget, and that was the copier rental, which was $18,000 higher, and that was due to our Xerox contract being higher than the prior year contract with duplicator sales. I'm just going to touch base on a few items that were under budget. Our total computer equipment was under by 807,000. Total travel was under by 104,000. Postage was under by 68,000. Telephone under by 49,000. Printing under by 49,000. EMARS usage under by 23,000, and furniture and office equipment under by 19,000. So the total fiscal year 23 administrative spend, we were 18.33% or $9.2 million under budget. That includes not having to utilize any of the $4.1 million of unallocated reserve. If we don't consider that reserve, we were actually 11.09% or $5.1 million under budget. So overall, we spent $40.9 million, which was 1.2% or $503,000 higher than the $40.4 million spent in the prior year. Any question on that admin budget before I talk about the hybrid percentage for a minute? So
I
that
believe we're good.
that hybrid chart there shows that $40.9 million and how it's allocated among the 5 pension plans. At the end of the year at 6/30, we took that $40 million, we identified items that were plan specific, and that was mostly legal charges that related to specific cases for the C or the K plans. So we took that out of the hybrid amount. We applied them specifically to the 5 plans. And then we also identified the separation expenses that we've been doing for the past couple of years, which we are doing statutorily, and we have to do in fiscal year 24 as well. So that totaled $402,700. And that was applied specifically to the C plans based on the statute having those plans charged due to the split. So that hybrid percentage gets allocated and then adjusted, and then there's your final numbers, and they're the total expenses, still totaling the $40.984 million of hybrid costs. But that's how they, at June 30, applied to those 5 pension plans. This chart here shows the JP Morgan Chase credit earnings. And as most of you know, we had a setup with most of our JP Morgan Chase accounts where our fees were offset by our earnings. We weren't taking advantage of that because the earnings were higher than the fees. And so we tried to adjust how those accounts have been set up, trying to burn through a prior year balance that they allowed us to try to do. We still lost $100,000 in not being able to burn through that amount. And that's just because the interest rates kept getting higher. So we have converted all of our JP Morgan accounts now to hard earned interest. We didn't start doing that until February. And so we now offset that 100,000 opportunity loss, so to speak, and net earnings by the total earned interest over here of 179,000, and that is real dollars that are being applied to those accounts for C and K based on the interest earned on those. The top chart should go away in the next fiscal year because we don't have that set up anymore, where our earnings are offset by fees. We will pay fees, and then we'll get hard-earned interest in separate transactions. Questions on that?
No, I think that just to let you know, I think that was obviously a good move, and you know, we're always going forward, so it's we can look at anything we've got to change to this kind of structure. You know,
Yeah.
Offsetting fees I never thought was a good thing to do, but great job.
Yeah, once we started paying attention to that, you'll see that November one was pretty high, but then we started adjusting those accounts as we went, and you know, we burned through what we could those last 6 months, but it still wasn't enough to offset the prior year balance. Okay, I think that's all I have. Thank you.
Bill, you're muted.
I have rumbling thunder in the background and I'm muted. So we'll move to the Audit Committee administrative updates. Ms. Coffey is unable to attend today, but Mr. Daugherty is going to represent the department. And so let's go over financials with them first, this year and next year's budget. Mr. Daugherty.
Thank you, Mr. O'Mara. On page 25 of the presentation, you can see the end result of our fiscal year 23 budget. We came in under budget for a few categories: the life insurance, employee training, conferences, in-state travel, dues and subscriptions, and miscellaneous. Overall, we came in under budget by about 1.9%, or a bit over $11,500. Moving on to the next page is our proposed budget for fiscal year 24. It was presented as part of the overall KPPA budget. Most of our increases come from increases in salary related expenses, which include the 6% increase that all employees got starting July 1st, as well as reclasses starting or plans for reclasses during the fiscal year. Drawing your attention to note number 2. Earlier this week, we found out the actual cost for the year was going to be $12,970 for our audit software. It was straightened out, as I said earlier this week, when we got the final price. There was a lot of back and forth on the credit that was owed to us due to an overcharge when we added an additional user. It's unclear what the surcharge for the year was, but it should be more clear in subsequent years. Are there any questions?
Well, do I have a motion to approve the internal audit budget for the upcoming fiscal year?
I do have one question. The retirement cost is going up more than the salary cost. Do we still have a contribution rate in the retirement line that's too high, like Rebecca indicated earlier? Have we adjusted that in the internal audit section?
I am uncertain on that. I apologize. I will reach out to Kristen and I will get you an update as soon as possible on that matter.
It looks like that line item might be too high, but if we could correct that one, I would be willing to move for approval of the budget.
Betty, so would that mean we'll approve it with the potential of that one line item being changed?
Right.
That's a motion. Okay, I'll second it.
All right, I have a first and second. Do we have any other discussion? So we have a motion to approve with the caveat on employer retirement. All in favor, please say aye.
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 And that is approved. If I could, Mr. Summers has a hard stop, so I would like to go to what is next to be done? The audit committee agenda item, which is next. So if you could go to that, please. You and Mike, I believe, will discuss that. There's a proposal on what would be presented and when, or to which committees.
Yeah. On pages 27 and 28, I believe they've been looking at ways to reduce the amount of duplicate information presented at meetings. Kristen's worked with Mike and his group to determine what could be pared down. These are the proposed committees that these recurring items should be presented at. The red X's indicate items that may need approved, while the blue X's indicate the potential need for ratification. I don't know if you need to expand on that, Mike.
I think the items that affect my group that, Katie, if you scroll back up a little bit, we were suggesting that the quarterly financial statements do not get presented at the audit committee meeting because they're going to be in a C meeting and a K meeting and a KPPA board meeting. So that was the elaboration from my side on those quarterlies. All the other information, I think we kept in there related to the ACFR and update on audit engagements and that kind of stuff. And the final ACFR, I think, is also going to still come to the audit committee at some point. So we kept that in there. So I think my significant change or recommendation was the quarterlies. If you want to scroll down to the next page, I want to make sure I didn't miss anything else to elaborate on there. Yeah, I think that page is mostly audit items.
I think there might be an adjustment also to the fact that this is a KPPA audit committee instead of joint. And so there isn't a reason to present to both the K and the C boards. But Betty, you have a question?
Back on the previous page, Katie, I would like to see the management letter comments. I think that those should go to both boards, but for information purposes only. It's definitely a decision that belongs to KPPA in terms of how to address those comments. But I think the two respective boards should be informed on management letter comments. So that's the only adjustment I suggest.
All right, so that is, let's see, 1, 2, 3, the fourth item on that first page.
So Betty,
Yes.
you're talking about not for discussion, just for information.
Yes.
Well, so let's see. So they would not be presented, is that correct? I think
I
these,
would like to have them presented, but it would be an information only item that doesn't require any action by either board.
I
The
see, so
action would be taken by KPPA.
it would be an agenda item, but informational agenda item,
Right,
no approval, that type
Right.
of thing.
right.
Okay. How does the committee feel about that suggestion?
I don't know. I mean, I understand what Betty's saying. It's to keep people informed of things, but I don't really see the necessity of it since the action's going to be coming from the KPPA board. But I don't, and then that's why I said it's not for discussion. It's just, here's the management letter at the end of the audit.
I kind of agree with Lynn. I mean,
All right, so we have a suggestion to make that additional to CRS Finance Committee and the KRS Board on the management letter. So all in favor, please say yes.
Yes.
All opposed, nay.
Nay.
yeah, I don't think it's necessary, nay.
Since it's going to the KPA board and they're have representatives from C and K, I believe the information is being shared, so I'll say nay. Any other discussion? So I have here that we should have a motion to approve so that I believe Mike can save some of his voice in making quarterly presentations. The annual would still be made, but the quarterly would not. Is that correct, Mike?
That's correct, yes.
Okay. So do I have a motion to accept this distribution as presented?
So moved.
And a second?
Second.
All in favor, please say yes.
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 All opposed? All right, that passes. So I'd like, if I could change the agenda to go down to the charter, which is something else that is being proposed for us to adopt. So could we go to the charter, which is letter I? Help me with the page number.
That'd be page 67.
Okay. All right, can we go through that?
Certainly. So the changes that have been made, starting with page 67, we have included all approved changes from the previous meetings, as well as additions and edits that were discussed. These are all tracked through the track changes feature. They'll be marked red. The first item made at the committee's request was to have audit committee changed to KPPA Audit Committee. And that change has been made throughout the charter. The second change on page 69 is a decision that was needed, but has been deferred to the board for approval. The third change is also on this page. It was added to clarify how any disagreements will be resolved should they arise regarding system access. On page 70, we added additional standards that were discussed at the last meeting. Also on this page, we've made a change to clarify other items discussed at the last meeting.
Mr. O'Meara, Ms. Pendergrass has a question.
Yes, I'm sorry. Go ahead.
Before we get too deep into the internal control section, I have changed my mind on the amount of information that we have here. Agreeing with Lynn that less is better in this one. The first two paragraphs I think are good. And the roles in the internal control system are good. But after that, everything that we added on the components of COSO, I think we can delete. I think there's been some misunderstanding about the role of internal audit in internal control. Mike Lamb needs this information in his documentation because it's management's responsibility to design, implement, and evaluate internal controls. Internal audit would be testing internal controls periodically, but the management role should be emphasized more than the internal audit role.
All right, so are we on page 71? When you're talking about components of,
I'm sorry, we're it would start on page 70.
Yeah, where we expanded to put the 15. I think it is 15.
It's section 7.
right?
And the first two paragraphs that they have would be good.
Yeah.
Yes.
Roles in the internal control system, I think is good. And then after that, I think we can delete everything else
So
related to,
there wouldn't be a components of COSO.
right,
You would delete that entire
Right.
section.
right,
So we don't have to look at options 1 and 2 is what we're saying.
right.
Perfect.
Yeah. Yeah. Betty, I thought you did a really good job of explaining it then.
So we would go to section 8, scope of responsibilities.
Yes. Um, let me look at internal controls.
17.
Under number 3, I would change review to test.
Personnel role.
Internal controls and compliance. Number 3, instead of review and evaluate effectiveness of policies and procedures, test and evaluate effectiveness of policies and procedures. I mean, Mike Lamb and his crew has the primary responsibility for internal controls.
So we're on page 73.
Yes. Internal
Inter-
controls and compliance, which is the,
Number 3.
yeah,
okay.
number 3.
Review and test effectiveness of policies.
Test and evaluate.
Test and evaluate.
I'm sorry.
That's
All
good.
right. We have a rewording there. Any comments from the committee?
I think it's well done. The changes are.
All right, so we're going to go with test and evaluate effectiveness of policy procedures. All right. Then we'll be into internal audit. Okay, my computer just took me to page 21. I'll catch up with you in a minute.
Just glad you're not reading it on your phone. That would be really hard.
Okay, well, you all carry on. I'll read from the screen.
Okay.
So we're now in internal audit practices.
I'm lost. Scope of responsibilities. Risk assessments.
I think they've got all the changes that we suggested in
Yeah.
these sections. I think we've covered this material before.
Yeah.
So do we have any other additions or deletions to review?
Yes.
Well, there's the
Sorry.
one that says performance evaluation decision needed.
Right.
Let's see what that
right.
is.
I think that's
So-
a decision that needs to be made by the board.
Okay. Do they need a recommendation from us? I'm trying to find it.
Well, we're not in charge of personnel, they are.
Yeah. Okay. Sounds
So
good.
to recap, we have 2 decisions that we're proposing to present to the board. The evaluation and the reporting of the chief auditor. And then we've made 2 changes where we have deleted the COSO section and made a wording change. That was the number 3 in
Mhm.
controls. Have I recapped that correctly?
Think so?
Yeah.
So do I have a motion to approve as amended?
So moved.
Second.
I have a first and a second. All in favor, please say aye.
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 Any opposed? All right, that approved. So I think we've done all of the actionable items, Mr. Summers, just in time, I believe.
I appreciate that and I apologize.
No worries, no problem at all. So I'm sorry to delay, but if we could go to informational disclosure incidents, Ms. Bass.
Good morning. Carrie Bass, Office of Legal Services. I'm looking over the potential disclosure report for the last quarter of fiscal year 2023. This report looks a little different from the reports presented to the Joint Audit Committee in the past. With the KPPA Audit Committee, we wanted to revamp that memo and maybe make it a little more streamlined and straightforward, easy to understand. In the fourth quarter of the last fiscal year, there were 4 potential disclosures of member information. Those disclosures impacted 1 member each, and all 4 disclosures did not implicate HIPAA or federal law concerns or state law privacy concerns here in Kentucky, but did implicate the KPPA's internal data disclosure notification policy. So the affected members were notified that their information had potentially been disclosed, and the KPPA took steps to make sure that the disclosed information was not disseminated further and was retrieved by the KPPA. And all 4 incidents involved mail. And if you go to the next page, there's a little more breakdown on what happened in each of the cases. The third bullet point describing 2 instances of members receiving documentation from the KPPA with contents in a letter addressed to another member, that covers that summary covers 2 separate disclosure incidents. And then one additional thing I wanted to highlight is on the next page, external disclosures and breaches. I noted at the time this memo was prepared that Humana had been in touch with the KPPA about a potential disclosure of member information. And since this report was provided to the audit committee in board books, I have received an update from Humana on that incident. And Humana determined that a disclosure occurred involving a subcontractor. 3 members were impacted by this event. Their names and social security number were made available inadvertently to public accessibility on a cloud provider platform. The situation has been rectified, and the 3 members have been notified of the potential disclosure of their name and social security number. And those members have been offered 24 months of credit monitoring and identity restoration services. So I did want to give that verbal update on the note on that last page of the disclosure memo. Does anybody have any questions? Okay, I'll go ahead and move on to the next page, Katie. Thank you so much. Briefly, I wanted to introduce my colleague, Stephanie Hold, who took our vacant investigator position back in February of this year. Ms. Hold comes with several decades of experience with the Office of Inspector General at a neighboring state agency, the Cabinet for Health and Family Services. And she was gracious enough to join our team and has been such an asset to the Office of Legal Services and the KPPA as a whole. Stephanie, would you mind to say hello to everyone so they can get accustomed to seeing you? I'm going to have Stephanie present these memos in the future.
Yes, good morning. It's very nice to meet with you all today. I've enjoyed so far my stay here at KPPA and working. It's been a great team, so I look forward to it.
Well, welcome. We
Thank you.
appreciate it.
Thank you.
We also took the opportunity to revamp this memo a little bit, and now we have broken up the incoming fraud tips received by the KPPA into open and closed tips. So that under that open heading, you can see that we only received only received one new incoming fraud tip since the last joint audit committee. And that brings us to, as of the date of this memo, 7 total open cases. And you can see from the current action listed, the open status for each of the open 7 cases varies a little bit, but more or less, the KPPA staff is either monitoring or actively investigating each of the open cases. And then if you go to the next page, Katie, listed are 6 fraud tips that the KPPA Office of Legal Services has been able to close out since the final Joint Audit Committee meeting. And in all cases, the KPPA determined that it was not able to substantiate the allegation that was made in the fraud tip, or the information simply wasn't relevant to the KPPA. Are there any questions on the fraud tip memo? Well,
All right.
thank you so much for your time.
Thanks so much. All right, Matt, can we go back then to, I guess, the auditor independent statements and current internal audit projects?
Certainly. On pages 35 through 64, the internal audit team has reviewed and signed the auditor independent statements for the fiscal year 2024, just to update any and disclose any new potential independence or objectivity concerns. Does anybody have questions on that? If not, I can move on to the status of current audit projects. On page 65, we've included the estimated hours from fiscal year 2023 and the current fiscal year for our projects. We've included every audit and project included in the audit plan. We've begun only on a few, and we will begin on the others as we conclude our current projects. Any questions? Oh, sorry.
I have one question. Me trying to read this, if you look at the total estimated hours, it comes to 11,000 and some change, with a total availability of 99.75. And the administrative hours seems to be at 2,271. Seems to be what is making those two out of balance. So just wondering about that administrative hours of 2,271. So if you could follow up on that, Matt, so we could understand that better, or I could understand that better.
Certainly. I think Lynn has a question.
Yeah, I just, I was trying to figure out on the first 4, you have a scheduled start date that is later than the actual. And I'm going to say that's good, but can you explain to me how you were able to do that? So, that we were able to be ahead of ourselves, so to speak.
Certainly. I believe this was the audit plan for fiscal year 24. We weren't, I think at the time of its inception, or it started planning, we were planning to start them around those times. However, we finished up with our currently approved projects, which I believe earlier than anticipated in fiscal year 23. And I believe that's why we got those approved prior to the start of the fiscal year, if I'm remembering correctly.
Yeah, there's definitely nothing wrong with it. It's, you know, I hope that part of it was that you had less problems with the other audits, you know, those kinds of things. So,
If my memory serves, at our May audit committee, she asked for approval for the 24 schedule, and it was given to her at that time. So I believe that it allowed them to start before the end of May.
yeah, that's good. I think you're right.
All right, any other questions?
Where did we land on the difference between planned estimated hours and available hours, and why administrative hours are so high? Are we going to research that?
I'm going to get an answer from Kristen, and I'll ensure that you all are updated on our reasoning for that.
Sounds good.
Anything else on this page? All right, so update on self-assessment.
Yes, on the self-assessment on page 66, the self-assessment is required by the Institute of Internal Audit to be performed at least once every 5 years to ensure that our department is compliant. We sent out surveys to the recommended members of the executive team and the board. We understand that this has caused some confusion. The questions on the survey are the ones that are drafted by the IIA. And we would appreciate it if anyone who has not completed one of these surveys at the current time could have them completed and submitted by August 31st. This would allow us to finish this without any further delay.
Matt, I asked whether the board or the audit committee were asked to fill this out, and I was told no.
I believe, I'm unsure of that, but I believe there was I may have misspoken and said board. I have not been involved with this project, but I believe for sure there are committee members, audit committee members who have been asked to complete the survey.
I didn't get one.
Yeah, they're on the call. They could respond to that.
I believe it followed that the paragraph there, the audit committee chair and vice chair received them. I don't know if anyone else in the board did.
I just wanted to say, I mean, I went through this and I have it up on, well, I had it up on my screen. I felt really almost incapable of filling it out because there, especially the things that talk about staff, you know, how do I evaluate staff when I'm really not exposed to staff? And I guess my word back to internal audit is, now that we've kind of revamped everything, it would be, I think, good that if people like Matt and Madeline, when you're involved in an audit and it's presented to us, that we hear not just from the auditor, and she does a great job, but if I'm going to be commenting on you all, on the staff, I think I need to hear something from you. So
Certainly.
I can fill it out and put NA on all those things that have to do with staff, but I'm not sure that was really the purpose of it, but those are my comments. And Bill, you had it too, so I don't know how you felt about it.
Well, it was very staff oriented, and we have very limited exposure. So I totally understand your comments. I did understand that that they were using, is it IIA?
Yes.
Mhm.
So whether it was geared just for internal interactions, I'm not sure, but that seemed to be the focus.
I will tell you, many of the executive staff had the same position. We felt incapable of filling them out due to lack of exposure.
Sorry.
So now we're getting to know you, Matt. So the August 31st deadline, is that a deadline that comes from IAI or AI or whatever, or is that a self-imposed deadline?
I believe that is a self-imposed deadline. Again, I can confirm that with Kristen. And
That would make sense since it's a self-assessment at this stage.
Matt, I believe our deadline was August 4th, and if you don't have any, if you're lacking response from KPPA staff, let me know, please.
Certainly.
So Bill, let me bounce it back to you. Should we just complete it with the NAs where it refers to things that we feel incapable of making judgments or make?
I would think that would be appropriate. I mean, you have to fill it out as you, what you think is the best response. And NA was not an option to choose, which I found interesting.
Let me see, I've actually got it up here, so. I've got don't know. It's not NA, it's don't know. So that's where I would be, if it was really referring to staff, I'd be putting an X in don't know. So Bill, if you're comfortable with that, and
Yes, yes.
okay, and my comments back to Kristen is, I'd like to next year be able to answer it, or whenever it is, the next time we see it, answer it where we could discuss our thoughts on the overall department.
Certainly.
I think another suggestion would be, we only have a committee of 4. So I think giving it to all the committee would be appropriate. They all have an interest and all have interaction.
I agree. And I bet Betty agrees.
Yeah, and I would suggest you talk to staff as to who they would feel had the best insights.
And then the next time it comes up, talk about it before we get it in the mail or in the email.
Yeah, once every 5 years is a long stretch for a committee member.
Yeah.
Which it can, this would be a discussion for, the committee and Kristen, but it can be performed more than once every 5 years. That's just the minimum to ensure compliance with the IIA.
I would expect that the self-assessment occurs more often, and the external peer review, which is the term that we use on the external audit side, that the peer review would be the one that did not occur quite as often. 3 years at a minimum. I would expect that we need to be peer reviewed by other internal audit organizations.
And I believe that's what this is. This is a self-assessment with an external verification of our compliance. This is
the first component.
An external independent party will come in and verify kind of like the survey, and if they agree with our self-assessment. accomplishing a similar goal as the peer review.
Well, I would expect the external assessments to look at the quality of work papers and internal audit reports, not just whether or not we got the self-assessment right.
Well, and they will. In addition to the surveys that have been sent out, there are they have been taking a sample of past audits, the work papers associated with them.
All right, good discussion and feedback. Any other comments or questions? All right, okay, we've done the charter. So are we ready for Ms. Evans for professional articles? Is that what's left? I haven't skipped anything, have I?
Correct. Yes, it's just the article left.
All right.
Okay, so this article is just about keeping in mind non-financial risks, like stuff that doesn't affect the bottom line, but is a risk to how the agency operates as a whole. And so this article hits a lot on ESG. It's scattered throughout because that's starting to become a measure of how to assess a non-financial risk. And also some measures that we could use to measure the risk as well and monitor it. And right now, we're not really in the ESG space. It is something that's like coming, and I take training on it every now and then through the IIA or Couleurs, Walter Couleurs, which is our software training. A teammate works through them and they give us, or I take some free training on it. But what I wanted to hit on with the non-financial risks that we can address currently are things like, and this has come up in quite a few other meetings, but employee turnover. How do we keep people that we hire? How are we ready for when people can retire and we lose that institutional knowledge? These are other like non-financial risks that aren't they're not addressed in this, but I just wanted to take that time to highlight it. And then we have some, at the end of the article, we have questions for the board members to consider when we're doing the risk assessment to keep in mind about the non-financial side of risk.
Bill, could I make a couple comments?
Yes, sir. Please do, Mr. Hagan.
Yeah, with regard to the staffing issue, you talked about the risk on staffing and turnover and so forth. We're it's front and center, and I appreciate
yes.
anything you have. I will say it's a key part of the strategic plan. We actually have a meeting at 3 o'clock this afternoon with Provaliant. But they are really working to help us and deal with that whole issue. We have a whole lot of institutional knowledge of people with 20 years of service and more.
Right.
The second thing, you mentioned that ESG was coming. I'm not sure what you meant by coming, because it's
well
big.
In the training that I've had in it, now these are internal auditors in different sectors. So you'll have an internal auditor in like a energy company that might be trying to report, like this article talks about reporting your carbon emission levels. And so say you're working at a energy company as an internal auditor, how do you measure that? Because it's not a financial, like it doesn't hit the financial statements, but it is, that company is wanting to be transparent about those kinds of issues.
You see that applying to KPPA and KNC?
Well, in the internal audit conference that I went to in San Antonio, the Texas Teachers Retirement System had a division dedicated to ESG issues. And so because it's a division in that retirement system, the internal auditors of that division had to develop a way of how are we going to test the controls that are in this division. So that's why I say it's becoming a more popular topic in different sectors. It's not just an investment thing. It's in it everywhere, it seems. And I don't know if it's coming to KPPA specifically. It's just a consideration for future musings. If it ever does come to KPPA, then it's a risk to be considered that's a non-financial and it doesn't hit the financial statement.
Yeah, it has come, and I think we've pretty well dealt with it, frankly.
Very good. Thank you very much. Any other discussion or questions for Madeline?
Thank you for the article.
My pleasure.
All right. Matt, do you have anything else for the committee?
Nothing else from me.
Committee members, do you all have anything else for the committee? All right, then I think it's time to thank you and staff and everyone involved for a very informative and good meeting. And I'll declare the meeting adjourned. Thank you very much.
Thank you, Bill, Betty, and William's
Thanks.
gone, but